following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create new agreements based on respect and love. Take the responsibility to make agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We have the Dow Industrials down. We have the Dow Industrials up 126. NASDAQ is up 49. S&P is up 15. Gold contract up $2.60, trading at $12.3410. Silver up 5 cents, $15.59 an ounce. Light sweet crude down $1.39, trading $68.74 a barrel. Notes and bonds. We get the 10-year note up one tick, 119.13. 30-year bond up 13, 143.01. Now both the 10 and the 30, folks, went back into their strength from May, rejected it with much lighter volume yesterday. You're getting follow through topside out here today, and you do have volume behind the move. That is saying notes and bonds still want higher price, lower yield. Deviant, there's no doubt. That, especially in the aspect that you get the Federal Reserve, started the meeting this morning. They're going to have a statement at 2 o'clock tomorrow afternoon. Market expectation is that they will not go up on rates. What's intriguing here, though, no doubt, is that they're still buying the notes and bonds. So we'll see what's inside that statement. King dollar. King dollar up 179 ticks, trading 94.220. 290 rather. The euro is trading at 116.96 to 1 US dollar. The yen is out here at 111.82 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go to the world of gold first. So what do we have out in the gold market? Gold market out here this morning, what you had, they slammed gold down to 1222. That was going back, testing the last swing low. It was a test on dramatically lighter volume. You get a rejection of lower price. Bottom line, you're up $2.70. We'll see whether they can get any follow-through. Silver did the same type of setup, and this thing snapped back really quick. They both did, folks. Silver right now, you're up 0.3%. Silver, when that got slammed down this morning, that got down to the price point of $15.38. Right now, you get 71,000 contracts. Silver looks like bottom line wants to make it up into this 1580 area. Dollar index, that was just the reverse correlation, of course. What we had with the dollar index right now is trading up 179 ticks. It's going to need a lot more volume than it has, because this is what we did on the dollar index. So dollar index has been in a consolidation for about 3 months. Each and every time that it goes up to the 95 area, can't handle it. Volume decreases dramatically, no more buyers. Each time it gets down to the 94 area, guess what? No more sellers. Bottom line, someone's going to win out here. Thus far, the range is still in place. Some of the higher volume equities in the market out here today. We're going to have Apple earnings coming out at 4:30. Futures will be closed, but you can expect Apple to basically push that NDX 100 around, as well as the NASDAQ composite. Right now, you have Twitter up 57 cents. You have Pfizer up $1.30. Facebook is up $1.86. We have Qualcomm up $2. Wells Fargo is off $1. We have Netflix up $3.80. When you take a look at those, most of those folks are dead cat bounces. You got to remember that we go take take a look at Facebook first. Facebook is up $1.80, trading 172. Well, last week it was at a high of 218. Big problem. Netflix, NFLX. Netflix out here, same type of setup. Netflix, 3 weeks ago, was $419. You're at $338. Amazon, different animal. AMZN, what you have with Amazon? Amazon came out with this numbers, hit a high. Bottom line, looks like Amazon, we got down to $17.39. Right now, you're at $17.74. You're going to want to watch Amazon coming into the close out here today. The reason being is this, is that Amazon did have a seller in it this morning from 10 to 10:20. What we do have intraday on Amazon is that you have a high volume low that's laying out here at the low of the day, which is $17.39. Most times what ends up happening is this. I was looking at these bulk trades going across, folks. What you have, picture, you get a $1,774 stock. What you're going to see out here is that when that thing was coming across, though that seller was basically pushing out about 2,500 shares every about 15 minutes. That's what it was basically jamming that thing into lower price. We'll see if that seller comes back coming into the close, because the bottom line, it looks like there is you're selling 2,000 shares of a $1,700 stock. That is big numbers. The GDX, we go over to the GDX. GDX out here, got a little juice in it today. We're going to need more volume. What will happen with the GDX is this. This is the Market Vectors Gold Mining Trust. This will get volume into the close. Right now we're at 15.4 million. I don't expect we're going to get a huge amount. We'll probably get about 15 million. What the GDX just did do is it got back inside the higher range. Right now it's inside the higher range only by 3 pennies, but guess what? That's a start. The XAU, we take a look at the XAU. XAU right now is up 81 cents. That basically was saving itself from jumping off the cliff. And let's see if we could go to the Gold Bugs Index, because the Gold Bugs Index all but jumped off the cliff. The Gold Bugs Index yesterday got down to a price point of 164.70. The Gold Bugs Index has to get back inside the 168.32 in order to be inside that higher range. And the deal with the HUI versus the XAU is important to wrap your head around. The reason being has to do with these gold companies basically out there basically hedging, meaning selling forward once again. You know, there hasn't been a lot of, when they do sell forward, this is what ends up happening, folks. If the gold companies sell forward, depending on how much they sell, they do have to put that inside their filings with the SEC. So once they, and there's a certain amount, okay? It's not like if you sell 10 ounces of gold, you got to sell forward. You got to disclose it. But let's picture that you're selling 6 months of your production going forward. Bottom line, that is a material fact. You got to get it inside there. Dow Industrials right now, let's go to Apple actually. So Apple right now trading at a price point of $191.49. The low for today has been $189. The high has been $192. You get a range that's trading. My take on Apple at 4:30 is that we're going to be down there somewhere around the probably the 170 area. We're at 191 right now. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now trading up 115. We get the Nasdaq up 45. S&P's up 13. And if we do go over, let's get into Apple for a second. So this is where it's Apple's right at its highs. There's no, bottom line is that when we take a look at the highs to the lows, this is what you have. Your highs to the lows in the last 12 months. Your lows 148, your highs 195. Right now we're trading at 190, 134. Apple is looking to take in $52.4 billion this quarter. And this is always one of the slowest quarters, by the way, folks. That's how this shakes out. Bottom line, that's what they're looking for. Now, when we take a look at Apple, what you're going to see is that, first off, we get a bunch of gaps that are left over from May 1st, okay? That's where the 170 comes ASAP. Now, that's on the daily. You put this on the weekly, what you're going to see is, bottom line, we went topside, had it all. But what is also problematic out here is this, is that Apple still has a high volume low of February 9th. That high volume low is problematic for the equities that the test has not been done yet, because these tests, they love to basically test high volumes, folks. Then if you take a look at the trend that we started going all the way back to 2016, Apple was $104, goes topside, tops out thus far at 195.96, which was last week. That being said, what you're looking at also is this. You're looking at is that when we broke, and we broke with conviction in February, that's a monster break with conviction. And all we did is come back up to the other side of the trend line, and bottom line, we'll see at 4:30, is it going to make it or break it? Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil has an outstanding show every trading day right here, 12 to 1 Eastern Standard Time. Also has a great newsletter. Opening call, you can come get that newsletter, 30-day money-back guarantee. Go to TFNN, go to Trading Newsletters, see opening call right there. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very good. Thank you.
Good. So, where are we going to go?
So let's go straight to the Dow. So the Dow As you might remember, every time we've had one of my Chapman Wave peak Ds, that's the fourth highest peak in the Chapman Wave, started off way back in January the 26th. We had a peak D, the fourth highest peak at 26,616. Had a huge tumble down to the 23,360 level. The next one was in June of 2018 on the 12th. We went to 25,402, had a pullback to the 200-period moving average at 23,997. And then we had another one, the fourth highest peak made on Friday when we reversed from a peak D at 25,587. So we went short. Actually, we went short at just after the pullback on Friday. So we're still at least got some comfort here because there was a rebound today. But what's really important, and I mentioned to my subscribers, is that the moving average convergence divergence is still holding pretty darn well, and the stochastics at 85%. So it's going to be price that really makes the difference here. What I have emphasized is that the weekly chart is in leg D, and it's way under the previous high of 26,616. So there's a rotation going on. The Dow going into the QQQs, the Index 100 high just recently, and the SMA, the rally in the semiconductors, as well as the XLK, the S&P high tech, or at least the tech sector ETF, the Dow was weak, and now the Dow is holding much better, and I think it's because of the makeup of the Dow. So, but just in terms of technicals, we did go short there. However, we are still long UTX, which has had a really nice bounce, but we're along from the 119s, and it hit 136.66 on July the 26th. It's pulled back. It's holding quite well, and you can see the weekly chart has what I call a Chapman Wave inside wedge resistance line, and it's like a magnet line, and it's holding very well in the weekly. So if you put that together with the rotation through the different sectors, it's really tech sector that's been terribly under pressure. What's really important right now is that within the context of what I'm looking at, the semiconductors have held quite well, but are way under their high, the most recent high of June the 7th, and that was at 112 round number high, the peak E, and it comes down to the 200-period moving average. So we're back to being short the semiconductors. And what's also quite important as far as I'm concerned is that if you look at the Amazon, and I went through my during my show, my noontime show called the Tiger Technicians Hour, as you mentioned, the peak F that was made at 1880 in Amazon, the Google top, I like to call it Google, let me just get that softer, made a peak E top 3 days ago. It's pulling back. And if you look at, so this is Netflix. If you look at Netflix, Netflix has already done its job way back at 423 on the 21st of June. It made its high. It's trading now at 338. You know, now we're talking about Apple. Well, Apple has just made a peak E in the daily at 195.96, an all-time high. It's a leg E in the weekly chart and leg D in the monthly.
Oh, that's going to get interesting. Okay.
Yeah, it's very interesting because it's at the point where it really has to have pretty perfect an announcement and a follow-through of what they expect.
Because then that would be a restart if it was going to go higher, right? Would that be?
Right. So the weekly chart would basically accelerate and move higher. But I'm just looking at this and I'm saying, you know, under the best circumstances, the way things are looking right now, it behooves Apple to not break below 186. It's trading at 191, somewhere around that 86, 85 level.
Okay.
If it takes that out, you start to weaken that weekly chart quite a lot. So it's going to be very important. It's going to be very important in the context of the QQQ, which is the NDX 100 trading vehicle, because that made a high at 182.93 on the 23rd of July. It's had a very sharp pullback. I'm looking at this and I'm saying all these stocks are ready for a timeout. It's not a big deal. The QQQs are suggesting that timeout would be, I think it would be beneficial because it would re-energize the monthly charts looking out towards the latter part of the year. So we'll be watching this very closely. So we're selectively short, we still have long positions, a couple, and we still have that IBB, which is the NASDAQ. This is the NDX biotech sector. So we're in at about 110 and straight trading It hit, let me just check that out. Yeah, it hit 120.06 the other day, and it's pulling back some. We've taken some profits off, having a nice session today here as well. It would behoove the biotechs to have a decent timeout because, you know, if you really want to accelerate to the upside when you've already been making highs just a week ago, it seems to me, just looking at the markets generally, looking at the technicals, it'll be better if they take a bit of a timeout now. And this is the best opportunity they can have because of the summer doldrums.
Yes.
You know, markets can be messed around either way. But I do see quite good support in these indices, not too far down. So this is going to be important as to how the market reacts to whatever Amazon says that is really overnight. It's not so much straight after the market closes when they come out with a report.
Sure.
We'll see what happens.
Folks, you can go over to our website at TFNN, get Basil's opening call right here, right now. You go to TFNN, go to newsletters, go to trading newsletters, and of course, each and every day, don't forget, you can listen to Target Technicians Hour, noon to 1. Basil, you have a great one, safe one. Look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now up 130. We get the Nasdaq up 48. S&Ps are up 15. Let's go over and take a look at a couple of these steel stocks. So AKS came out with numbers. Bottom line had a monster miss on numbers. Down 73 cents. You're talking $4.60. This is off, down with volume. And if we take a look at this, this is where the bottom of this consolidation is 405. You get a high volume low at that 405. It looks to me like you're going to go after that level. We'll see if you get a breakdown, because if you don't hold that number, that could be really spell some big trouble in paradise. And when you talk about a miss, they had quite a miss. They were looking at the aspect of let's see, their range had been, they planned on taking in 146 million to 190 million. The bottom line is that they took in 148 million. You know, way low in a huge way. And that, if we go over to U.S. Steel, so U.S. Steel is going to be coming out with numbers tomorrow. U.S. Steel is down 42 cents. That's trading $36.39. U.S. Steel, I believe, is going to have that high volume low also. Yeah, so U.S. Steel is laying out here with a high volume low of $31.37. That's also problematic. So, picture, on a weekly basis, you came down with 69 million. We went up last week with 37. Your 37 was going into 64. Bottom line is that you have more sellers than buyers. When they look at that supply and demand curve, it's pretty intense how that baby is being laid out. If we go take a look at inside the NDX 100, the strength versus the weakness, what you have out here today is that your strength is alumina. That's up 11.2%. That is one monster number, no doubt about that. Alumina, they manufacture market integrated systems for large-scale genetic variation. So they're in the biotech business. The low is 170. The high is 321. That's the high out here today. And that has volume behind the move. Let's see, did they come out with numbers? Let's see what we got here. Yeah, they come out with numbers. So, revenue estimate, earnings per share estimate was $1.11. They made $1.43. Blew it away. I mean, that really blew it away. Huge. Revenue is $830 million. Big numbers there. This is genetic testing. And if we take a look at this, let's see what we got. So, if I put this on a weekly, no, you don't have an ABC up, but this has been a one-way shot. This was trading at $119 in 2016, so pretty intense, no doubt. Some of the other high volume, well, the equities that are putting juice into the NDX 100, you have CLAC, KLA 10 Core, that's up $10, it's at $11.10. Amgen is up 3.5% or 658. Now, taken away from it, you have Insight Corporation is down 3%. You have Seagate Technology off 2.3%. You have Walgreens off 2.2%, and you have Baidu down 1.79%. If we go over and take a look at the Russell 2000, we use the IWM to look at the Russell. This Russell 2000 looks to me like it is building cause for lower price, and this is why. So, picture. Now, the way the Russell moves around also, folks, is this. You have very fast moves intraday in the marketplace. It seems that they can move the Russell as an ETF up or down a couple points very quickly. What we have out here is that the first high that was generated was in June. We got up to 170 bucks. You know, we came off that high, I mean in May, it was 170 bucks. We came off that high, we had some volume. We went back up and we tested that in July. We came down hard twice last week, and now you're bouncing with light volume. So it looks to me like the consolidation is in place. The lower end of this consolidation still has some juice behind it. This thing hasn't broken down yet, but what you do have is that as you go to the higher end of the consolidation, it just can't handle price. We get over and we take a look at the well, actually, let's go into the oil market. So oil out here today, oil has had volatility, continues to have volatility. Right now, oil is down 2%. The move out here in oil today went from $70.22 to $68.48. We've done 484,000 contracts. So that baby looks like it's going to try to go to its lowest swing point again, which is $66.29. If we go take a look at the XLE, the ETF structure, what you're going to see out here on the ETF is that it's been trying to get up into this high for quite some time. The high that we're talking about is $79.41. and it's having a tough time just with the last swing high, which was 78. We've made 77.61 today. You got a contraction of volume. This bottom line looks to me like, you know, it's can't make it at the top of its consolidation once again, and will go after the lower end of its consolidation. We already had the two largest weighting structures inside the XLE come out with their numbers. We had Exxon come out with the numbers, as well as Chevron. Both of them, Chevron actually went up, but both numbers were bad. Let's go see what Chevron's doing, actually. Yeah, well, Chevron gave it up. Chevron went up $1.50 yesterday and has given it up $1.50. Chevron's having the same type of situation, meaning that it can't seems to get by this downdraft that had been created out here at the beginning of May. Now, we get the Fed meeting starting today. You get a statement coming out tomorrow. Let's go into the banks, the XLF. So we take a look at the XLF. XLF right now is trading down 20 cents, 27.90. And this is going to be subtle, but this is a problem for the banks, and this is what it is. So picture, we have light volume out here today, folks. In fact, let me pull this up for a second, which makes sense. It's summer trading. Okay, we're at 460 million. That's saying that the NYSE will end up doing probably, let's see, 336. Yeah, it'll do 750, but that's still light volume. That being said, what you're going to see in the XLF is that you actually have an expansion of volume. Yesterday we made a high with 56 million shares. That high was $28.35. Today, you're coming off that high, 70 million already. JP Morgan, we take a look at JP Morgan. Now, and we take a look at that aspect, that also is saying that I wouldn't expect that the spread between the 2 and 10-year note and bond, note and bill rather, would flatten out. That's going to basically open that baby up. You know, so what you have out here is that the JP Morgan's down $1.70. The volume's not huge in JP Morgan. Bottom line is that they are selling it. We take a look at, let's go to Bank of America, BA. Actually, we'll go to Berkshire Hathaway, because Berkshire Hathaway is the largest weighting structure inside the XLF still. Yeah, Berkshire, whatever this is on Berkshire is just having a hard time holding price, you know, and maybe that's the, I hope it's not the insurance business, and because we are basically, you know, getting closer and closer. You know, hurricane season's already started, if you happen to be in Florida, the Caribbean. But the reality is that in about another 2 to 3 weeks, this is when that water gets hot beyond belief, and this is when this thing can steam up. And you know, Berkshire Hathaway is having a hard time holding higher price. Stay right there, folks. We'll be coming right back. We have the Dow Industrials up 127, NASDAQ up 49, S&P's up 15. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now trading up 135. Nasdaq up 46. S&P's trading up 14. You get. Let's go over and take a look at Amazon. So it's going to be curious as to what they're going to. Amazon right now trading at 1776, and we'll see how this closes out because of that high volume swing low that's out there. The Apple, of course, as we come into the close, that also is going to be active. Right now, what you have with Apple, Apple's up $1.22. You're trading $191.14. And let me just, I'm just sure I should have had this so I could have brought up the Thinkorswim platform to find out what the expected move is on Apple after they come out with their numbers. So what Apple has been pushing out, which is pretty intriguing, is their new services. But let me tell you something, folks. The bottom line is that Apple has to sell iPhones because that's where their big spread is. This is in margin. What are their margins? The margins, the iPhone sales. That's the big deal. They are growing with their services, no doubt. But guess what? You don't get the type of margins that they actually need with services versus that iPhone. What is going to be intriguing, of course, is that Apple market cap is $939 billion right now. And between Apple and Amazon, they are fighting for the first billion-dollar company. Apple is the leader. Amazon is at $867 billion. So that is going to be a big number coming after the close. If we do go to the Qs, we just take a look at the Qs, what you're going to see in the NDX 100 out here is that the NDX 100, this is so intriguing because it's wavering right at its 50-day moving average. You know, bottom line, we came down to that yesterday. They were buying it yesterday at that 50-day moving average. Bought it this morning at that 50-day moving average. If we go over to the composite and take a look at the composite, so that was the NDX 100. We take a look at the composite. What you're going to see inside the composite is that the exact same type of setup. Yesterday, though, we had closed underneath it. So these Apple numbers are going to be a big number out here today because of the fact that how fast and furious that NDX did come back. And that's how the NDX likes to trade, folks, okay? That baby trades fast and furious on the way up as well as on the way down. What does happen on the way down, which is always incredible, like anything else that's coming down inside the market, the elevator has no stops. When those babies get hit, they get hit in a very large way. Well, you know, when we take a look at what is going to happen on Thursday, so we get the Federal Reserve that is meeting today and tomorrow. They're going to come out with a statement. the market expectations are basically it's going to be carte blanche, meaning that nothing is going to basically be done. What we are going to have on Thursday is the Britain Central Bank is going to be coming out with numbers, and that I expect is going to basically move the pound. What's going to be intriguing here is this, is that right now this would be the first time that they actually, the expectation is that they're going to go up on interest rates. Now, the last time that they went up on interest rates, they had to go down, I believe that was 2014, maybe it was 16. They had to go, 16. They went up and they had to go right back down the next month because you had Brexit, you had kind of the currency in turmoil, market in turmoil. Bottom line, it's going to be intriguing to see if, in fact, they're going to go up. Because if they go up, even I would say that the expectation is that they're saying going up, we will see some big movement inside the gold market, silver market, meaning we'll go topside. I expect the dollar will go downtown. And the reason would have to do with is the market basically recognizing, saying, uh-oh, they are going to start tightening over in Europe, which would be pretty wild, you know. So we'll see where that baby shakes out. Then, of course, we have the GDP, the jobs number is coming out on Friday. So we get some movers for the whole rest of this week. And this has been one fast summer. There's no doubt about that. That's supposed to be quiet. But we, volume-wise, you know, Mondays, Fridays, you've had some quiet markets out here. Other than that, guess what? You've had action. If we go back inside the commodity market out here, you have soybeans are up by 3% today. Corn's up 1.3. Wheat's up 1.3. Cocoa's getting hit on the way down. That's down 3%. Sugar's down 2.5%. Crude's off 2%. Crude's basically getting down there pretty good. Well, if we go over to the wheat market and we take a look at wheat, you're at $5.53 a bushel, and this is coming at the top of its consolidation, and yeah, and you get some juice. We get some juice in this, so that's pretty cool. Top of this consolidation is $5.70 a bushel. Wheat had taken out a B point of an ABC structure on the way up. That did it last week with strength behind the move. So, you know, the commodity sector itself, folks, is starting to get a little juice underneath it, and we'll see whether that can continue. We get open, we take a look at Walmart. So Walmart trading out here at a price point of 89. Now, Walmart's still having a hard problem holding price. You know, we came off those highs of 109. You're at 89. There's not much there. You know, bottom line is that when we talk retail, I mean, Walmart, no doubt, is a powerhouse. That being said, it looks like on a continual basis, the amount of things that we order online and get delivered to us versus what we used to go to the store for are pretty dramatic. That's how this seems to be shaken out. We get over and we take a look at the SMHs now. What's intriguing, you know, Basil was talking about the SMHs. And I believe that they were shot in the SMHs. Now, check this out. This is what's so cool. So the SMHs have also brought the market higher, brought the market lower. The SMHs topped out thus far in March. Okay? That being said, there's a pretty cool story that is on the Bloomberg today. And what it is this. The chip stocks in general, folks, okay, you know, have been really basically, you know, they were on fire, okay? They went nonstop up from 2016. You know, 2016, the SMHs are trading at 45 bucks. In January or March of this year, you're at 114. So on this pullback, what has happened is that the amount of folks that are actually stepping in, buying the SMHs is pretty dramatic. That being said, check this out. So they put in the last couple days over, let's see, that's 390 million 2 days last week, 174 million yesterday. That's monster numbers that you put in buying, right? Well, guess what? It hasn't moved, and what that is saying to me is that, guess what? You have inflows that are going in, And what has happened is that someone is in there just giving them as much stock as they want, and this thing hasn't moved. That is saying that the SMHs are going south. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading up 84. NASDAQ is up 36. S&Ps are up 11. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials up 97, NASDAQ up 14, S&P's up 12.5. And we go over to those NQs and take a look at it, folks. You're gonna get this volatility is going to continue coming into the close. What you had the NQs just as I was finishing up the last segment. Bottom line got a couple sellers in it. Bottom line, went from a price point of 72.63. We're at 72.38. That low that was established out there has a little juice, and of course what we do have out here from this morning, but the futures won't be open when the Apple comes out with their numbers, is that you have a high volume low at the lows today, which is 71.89. And what I expect we're going to see once those futures do open back up is that we're going to see some selling pressure. Well, the reason I'm saying that is that when I look at Apple, it's telling me that basically Apple wants to pull down, and with saying pull down, I'm talking about a good number here, 169, 170. Apple right now is actually pushing into its lower swing, small, it's subtle, but you do have an expansion of volume as it's happening. We've done 26 million shares. You're going into 21 million. That low established out there yesterday was 189. It looks like as we come into the close out here, folks are getting a little bit nervous. So we'll see how this shakes out coming into the close. And it doesn't look to me just yet that anyone actually knows where Apple's going to go, because the bulls and bears are fighting out there in a huge way. And Apple, no doubt, is going to basically tell the tale of what the NDX 100 is going to do, what the Qs are going to do. And the Qs right now are trading up 99 cents. That being said, they also, that last little tick down, they had some action behind them, meaning some good juice behind them, 175.94. And what the Qs have also is that volume low out here from this morning. The Qs would need, I would say, Amazon to get sold off into the close, and thus far that hasn't happened. Dow Industrials right now up 105, Nasdaq is up 42, S&Ps are up 13.5. Stay right there, folks. Going to be coming back with some numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create the perfect relationship between you and your body. Treat your body with all love, honor, gratitude, and respect. When you make it a goal to adore your body and accept yourself completely, you'll learn to have the perfect relationship with anyone else you are with. Market-wise, let's take a look at it out here. We have the Dow Industrials up 108, closing up 108, Nasdaq up 41, S&P's up 50, up 18.5. Percentage-wise out here, what you had, folks, you had the Dow Industrials, Nasdaq, and S&P all up about 4 to 5/10%. Gold contract ended up trading up $2.30 at $12.33. Good move on gold, and this is what it was. Gold came down to $12.21 this morning when about 8:30 this morning you had an announcement that China and the U.S. are going to try to get together on these tariffs. What that did is that that basically brought the dollar higher, that brought gold lower. Bottom line, gold as well as silver rejected lower price, start marching forward. what you had there, gold and silver, they came back into their strength. Oh, well, not into strength, into their high volume lows, rejected the high volume lows, had lighter volume. Now the bottom line is that we'll see where you get a sign of strength. Well, we haven't had a sign of strength in gold or silver in a long time. Notes and bonds, different animal. So note and bond market came back to its strength yesterday, rejected lower price, had tremendously lighter volume, and you actually got follow-through inside that market today. So that's going to be really intriguing in the aspect that we have the 10-year, it was up 1 tick, the 30 up 13. Now, they both were higher. They had the volume behind the move, though. So when you get into higher price or lower price, and you get the volume, and you don't hold price, most times you're going right back to test that area. So I expect both of them are going to go back to test that higher area from today. And what I expect we're actually going to probably see is that whatever is in the statement tomorrow or Thursday morning when the Bank of England comes out with their rate news, that's where we're going to get that move inside the 10 and the 30. King dollar up 189 ticks, trading 94,300. If we go over to that King dollar and we take a look at it, what you're going to see with King dollar is that yesterday you traded lower. You had a big contraction of volume. The contraction of volume we had out here yesterday, you only did 12,000 contracts. The 12,000 is going against 19. Okay, so there's no more sellers when you go lower. Bottom line, you did 15,000 today. You get an expansion of volume, nothing huge. What we have with the dollar index is this. Each and every time you're up at approximately the 95 area, you have no more buyers. Sellers take over. Each time that we're down to approximately the 93,500 to 94 area, guess what? No more sellers. Bottom line, that's the consolidation that we're in right now. What I do expect we're going to see is that between the Fed statement, the Bank of England, and Friday with the jobs number, we're going to get movement in that market. It's going to try to bust one side or the other. At 4:30, we're going to get the Apple numbers. Apple right now trading at $190.29. Of course, what this is going to do, this is going to move the NDX futures when they reopen. They're going to be closed when this comes out. And what the way Apple looks to me, you get a gap wide open at $168.9. That's problematic. You're at 190. You know, bottom line, I'd get red. Well, we'll find out. It's always nice when they come out with numbers because we'll find out real quick. Once you get into well, they can go to 184 in about a heartbeat. 184 is the top of the strength that was established out here on the weekly basis the week of May 4th. That being said, the real danger at Apple has to do with the high volume swing low that was established out here in all the equities on February 9th. And if you take a look at this, what you're going to see in Apple, I mean, it's a classic. This is absolutely, if you, depending on how long you've been around, this is a Bud Rolf's classic. This is a guy that was with us for years. And what we had is this. You know, a trend that started out here at $104. That's November of 2016. You go topside, you broke the trend with conviction the week of February 9th. The high volume low is sticking out like a sore thumb. That's $150. The high of that low is 160. And then what do? You go all the way back topside with lighter volume. You push into that trend line that was established. Excuse me, folks. What that sets up is that, number two, it sets up, you're testing the trend. You have lighter volume. You have the test. Well, guess what? The test that hasn't been done yet is that the 150. And if you want to see the different correlation where the test was done, Google happened to be the first equity meaning NASDAQ big cap equity, that did do that test. Bottom line is that came back. That tested, if we look at the weekly basis, you're going to see 992, 15.9 million. It tested with 11.8. And just took off. And if you want to see something really wild, I remember this so well. Amazon, folks, was so far ahead of the market at the market crash, because what you had in when Amazon came back. Oh, look at this! It's so long ago now. But Amazon, after the crash in 2007, 2006, bottom line, Amazon was the first one to test its high. It's basically as it broke out, and of course, in Amazon's case, it never looked back. You know, if we go back to 2007, you're talking about a $39 stock. Pretty amazing. And I guess time-wise, 11 years is a long period of time too. There's no two ways about that. Some of the higher volume equities out here. Let's go take a look at them. Actually, let's take a look at the volume first. Inside the NYSE. Oh, we get some juice. That's going to be interesting. You get a million share. You get 1 billion shares. Ooh, let me go look at the Nasdaq Composite then. 1 second. Someone put some juice into that. That is big volume, folks. And you get 2.1 inside the Nasdaq Composite. So they're buying something inside the, let me go look at something else. Let me just see this closing trade in the diamonds. Yeah, you get some volume in the diamonds too. So they threw some juice inside that Dow Industrials coming into the close. 877-927-6648. Give us a call, folks. Dow finished up 108. Nasdaq up 41. S&P's up 20. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 108. Yeah, the Nasdaq up 41. S&P's up 13. Let's go over to our man, Mr. Jason Path, as we do each and every Tuesday at 20 past the second hour. And don't forget, folks, Jason is on with Tommy and I every Monday morning. Tuesday as well as Thursday with me. You can get his great newsletter at thedutchbook.com. Jason, what's going on, brother?
Not much, man. How are you?
Good. Well, listen, we'll get, you know, we're going to go through what you get in your newsletter, but we got Apple coming out at 4:30.
Man, I mean, everybody's just kind of waiting around today for the Apple release. It's a big one.
It is a big one, you know, and it's like
everything tomorrow is gonna rest on what we hear here in a few minutes.
Yeah, and you know what's so intriguing is that you get the yin and the yang, right? You know, we had basically Google, Amazon,
right.
They did good. Facebook, Twitter went down the can. You know, I was looking at this morning, Samsung, you know, over in Korea was having not a tough time, but bottom line is that they were selling that off a little this morning, you know, so.
Yeah, it was weaker for sure.
Yeah.
Yeah, and that's the intriguing piece of the Apple release. You don't feel like there's any middle ground here. Either things are going well and you're going to pop way topside, or you disappoint and you go down in the can. So, I mean, it's amazing with all we have going on this week. You know, this one release has captivated the market here. We got Fed tomorrow, Bank of England.
Yeah.
You know, the Bank of Japan, you know, huge announcement. Well, a huge non-announcement really last night. So,
yeah.
Massive week, but, you know, here we are all staring at Apple.
We're staring at it, no doubt. So I know when we start off with the newsletter here, I'm looking at Bitcoin. So there's plenty of other people that listen in the afternoon. That let's go through Bitcoin a little bit. And you know, I have these charts up, folks. And remember, folks, you can get Tiger TV 24 hours a day. Just right on your cell phone. Go to just go to YouTube. Hit TFNN. Bottom line, subscribe. You're off to the races. HD quality coming in. You'll really dig it. So I'm looking at Bitcoin right now. And, you know, there's no doubt you got this off the bottom and you got it nice, man. So talk to us about it.
Yeah, so a couple of things we watch very consistently. One is certainly trading volume. Trading volumes have been up over the last month. Those have been not only stable but increasing, which, as you know, Tom, is very important. We also monitor volumes on the blockchain network where Bitcoin is exchanged through the blockchain. Those transactions have been higher. Wallets, which people have to download to actually own Bitcoin. Wallet creation has been up. Transactions has been up. Dollars per transaction is up. Those metrics correlate very cleanly to price for Bitcoin over the long term at a 75% plus correlation.
Wow.
Number of transactions correlates with the price of Bitcoin. So we monitor those on a daily basis. It gives us great insight into where the trends are headed. So what we've had lately is, and I know we're off a little bit today, but the move has been north of 40% since the end of June. You've got, and we track, you know, even Google search. You know, we have the chart in there on search. Search has been up 3 weeks in a row. So the perfect storm. The brew we've had here over the last few weeks is search volumes are up, great proxy for sentiment. Transactions are up, wallet creation is up, dollars per user on the network is up. That's all. This is a decentralized peer-to-peer network, so we're able to pull in that data on a daily basis and model it. And the bottom line is those things move up, prices moved up. And we've just seen this thing continue to work its way higher. We think we're in the third or fourth inning of a pretty strong bull run here through the rest of the summer in crypto.
You gotta love it. I love how your analysis, how you can actually grab that data, because you know it's intriguing. So think about when you're analyzing a stock, what happens is that you have to. You technically can look at it, fundamentally, you got to believe what the company's saying. You know, I've always told people, they ask me, what's the difference in fundamental analysis, technical analysis? Well, fundamental analysis, you're trusting what the company's saying. Technical analysis, you're hoping that you understand where the supply and demand curve is. Of course, it's a probability. But this is totally different what you can do with something like a Bitcoin, because they're all different places that you are grabbing data, right? When you see the trends going the same way, it's like, hey, man, you know, the theory is, you know, more demand, higher price, right?
That's right. So, for instance, you know, this week, and I'm looking at our transaction, you know, just over the last 30 days.
Yes.
We've gone, and these are rolling 7-day averages, so they're actually pretty stable numbers. We've gone from 190,000 to, you know, 225,000 transactions on the network. That means fundamentally more people are purchasing Bitcoin and sending it through the network to the tune of 15 to 20% in 30 days.
Wow.
When that moves up, and then you look at the wallet creation, we're close to 470,000 addresses on the network every day, up from about 400,000. So, you know, that's a double-digit healthy double-digit increase in 30 days. And what I tell folks is, they ask about this run we've had, is it for real? No one really knows how long it goes, but when we're up, 70, 80,000 wallets on the network a day, when we're up 15% in transactions, when search volume is increased week over week, 3 weeks running, that is a foundation for a strong bull market. Because the reality is, when those wallets are on the network, when those folks are on the network, that's not going to fall. Now, it will degrade, but it won't fall off the tabletop overnight.
Yes.
And when you talk about the value of Bitcoin, we view it primarily as a commodity for transmitting financial transaction in an anonymized way. That just doesn't disappear overnight. It will degrade, in a downtrend over 30, 45 days. But this is a pretty stable trend we're in the midst of right now.
Nice. Now, folks, don't forget, you can come right to the DutchBook.com, get his newsletter, free newsletter, outstanding newsletter. He's on here Monday, Tuesday, Thursday. We're going to switch gears, not switch gears, but he has something on the retail stores that are amazing. Let's talk retail stores, man. This is crazy.
Yeah, so clearly they've been in a death spiral, and that's been something that we've all seen in our own neighborhoods.
Sure.
But we really believe we've reached a tipping point in retail where even the stores that were doing okay are now being significantly impacted by other closures. And as those brick and mortar those have fallen off a tabletop. At the same time, retail is relatively healthy, right? We're up month over month. June retail sales weren't bad.
Yes.
It's online, and online has really filled that gap. Online retail is now 20%. I remember the days we were asking, could online ever get to 10%? It's north of 20%, climbing now.
Yep.
Huge part of the sector. Some folks are well positioned. Some folks just flat out aren't. So, we like a kind of a long, short position, long online, short bricks and mortar. As it's really reached a tipping point of no return for bricks and mortar. What this looks like in 5-10 years, again, nobody really knows, but the rate of decline in traditional retail is staggering at this point. Really reaching death spiral status.
Yeah, I heard a number this morning coming in on Bloomberg that they're expecting cord cutters to cut 33 million this year out of TV, out of the cable. 33 million. It's like
that's staggering.
That's staggering.
Yeah. And I mean, that's a significant percentage of the entire population. I mean,
yes.
That's just,
yes. And I don't know if that number was worldwide or just the United States, but it's a big number. There's no doubt about it. It's going to be intriguing, of course, with the stores. It's like, okay, malls, big malls are in some nice places, so it's going to be intriguing to see, okay, who's going to get in those. I mean, because you get some good real estate. The real question is going to be, what are they going to do with that real estate?
Yeah, that's right. And, there's some interesting business models for repurposing it. But my kids are into these trampoline parks, which do take over old big box stores. But at scale, who knows?
Yeah.
It's pretty scary if you own some of that real estate because there's only so many things that you can do with it. And nobody's really making money with it right now.
No. Listen, we always appreciate the education, man. You have a great one, safe one. We look forward to speaking to you Thursday, Jason.
All right, bud.
Thanks,
Take care.
Man. Stay right there, folks. We're going to come right back. Our phone number is 877-927-6648. Next segment, we're going to have Apple's numbers. Apple's coming out at 4:30. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Apple just came out with numbers. Let's see what they say here. So Apple closed at 190. Right now, it's trading at 191. So it still hasn't. It popped to 195 for a second. Let's see what the numbers are, though. Numbers go like this. The earnings per share, they estimated $2.18. They made $2.34. Revenue, they had estimated $52.4 billion. They did $53.3. So bottom line is that they did make their bottom line. They made their top line. Apple's not moving. Apple's up $2 right now. So we'll see how this shakes out. iPhones, the estimate was 41 point. Oh, this is going to be interesting. Let's see if they put some pressure on here. They sold less iPhones than expected. iPhone sales, they were expecting, where am I? Okay, 41.6 million. They sold 41.3 million. The bottom line is the shares still really haven't moved. Third quarter adjusted earnings, $2.34. The analyst estimate was $2.18, and it's going to be intriguing if Apple just doesn't move at all. Well, you're up $5 right now. So let me pull the screen over here for a second and see what we get. That's not enough to basically cheer on anything, meaning the $5 though. That's how that shakes out. So 195. Let me just look at this for a size. So your all-time high in Apple's 195.96, I believe. Let me see this thing. So yeah, 195.96 is your all-time high. You're trading right now at 195. They're going to need more than that, folks. The reason I'm saying you're going to need more than that is the way that Apple trades is that when you come out, let me go through some more numbers. So it sold 11.6 million iPads compared to 11.4 last year, but the iPad is definitely going down anyway. It has been. The market was expecting that. The average sales price for the phone, this should be positive for them, $724. The expectation from analysts was $699. The fourth quarter, they are projecting revenues between $60 billion and $62 billion. They're looking at a gross margin from 38% to 38.5%. That compares with analyst expectations of $59.4 billion, and the margin expectation was 32.2, and the spread. Mac sales, a different ball game. Mac sales came in at 3.72 million units. That is the lowest that Apple has reported since 2010. So that's a big number. It's going to be intriguing. We'll see where the whole rest of this starts shaking out. But the market itself right now is digging what Apple came out with. It's basically trading at its highs right now. We'll see if that continues, because what we do have is that Apple's actually smart coming out at 4:30 because the futures aren't trading, so it gives it like 15 minutes to move around. I suspect that the MacBook sales are going to be a little problem with them, and we'll see whether any type of a sell-off occurs because of that. The 3.7 million computers it sold represent 13% decline in unit year over year. Apple launched the new MacBook Pro, and our man, Mr. Dave White, you know, when we were doing the Tech Hour with Dave a couple Fridays ago, he was mentioning that what had happened is that they basically, a part of the new Mac Pro, which they're about $5,000 or $6,000, they had basically slowed down. Now they got that fixed. I read the story that they got it fixed, but the bottom line is that when you take a look at something like that, you're paying that kind of money, you know, you don't want anything wrong with it. So right now, bottom line, Apple is holding price. You know, you're at 194. You've hit 195. The all-time high out here is 195.96. And let's see what else they have to say. Well, if we go take a look at the 3 Qs and see what kind of juice they're putting inside the Qs closed at 176.45. That's traded at 177.20, and the high for today was 177.13. So it is putting a little juice inside the NDX 100. We go back to Apple for a second, and it's wavering. You know, we'll see where this shakes out today. So the high of today was 192.14. We're at 194.50 right now. You get any closer to that 192 area, that's where that could get really dangerous when we take a look at Apple. That's how that shakes out. Our phone number is 877-927-6648. We get over and we take a look at the, let's go take a look at the SMHs and see if it's doing anything to the chip stocks. SMHs closed at $105.89. This is trading same price out here. We go take a look at some of the higher volume equities out here today. We had Advanced Micro down $1. Pfizer was up $1.34. Facebook was up $1.52. Now, Facebook, that was a counter trend bounce in a huge way. Facebook came down, fast, furious, all of the above. Intel up 41 cents. Qualcomm was up $2. Qualcomm's got a huge buyback that's going on. Qualcomm's trading at $64. If we pull this back, this is going to have a hard time getting over the $64.99. Right now, you're at $64.09.